All right, gang, we're back, and I want to take you through something really cool this rundown. Have you ever heard the saying, a picture is worth 1,000 words? Well, today I'm going to actually demonstrate it to you. I literally want to show you the potential profit that you can get from penny stocks and really small caps in comparison to large caps. And, I could tell you the numbers all day long, but till you see it yourself, you're just not going to believe it. So let me take you through a few scenarios. Now, let me show you what you're looking at right now. You could probably see my cursor moving in circles on the screen, and I'll stop. What you're looking at right now on my screen is this is a relative strength list of the top 500 S&P stocks in order of strength to weakness. As you could see, the last number right here, it gets weaker and weaker. That's a percentage number. What XPCT1 means, this is the strongest gain over the last 30 days. And XPCT3 is the strongest percentage gain over 3 months, the last 3 months. And what we're doing over here is we're averaging these two to give you the average. So this is a relative strength average, averaging a 1 month high in terms of percentage and a 3 month high. And I use this to get a measure of the relative strength for stocks, for tech stocks, blue chip stocks, small cap stocks, all sorts of stocks. So this is the S&P 500. And as you could see here, the average gain, this is the strongest to the weakest. The highest stock averaged 53.06% gain over the last, I would say, 90 days, because you got 1 month and then you got 3 months, so say 60 days, okay? 2 months, 53%, then we have 42%, 37%, and Tiffany reported they're going to be taken over by a bigger company, by what was the name of that company? It was just this morning. I forgot, but it's a purse company. My wife has all their purses. Louis Vuitton, that's it, Louis Vuitton. $26 or $16 billion, huge takeover. But anyhow, as you could see here, these are the top, say, 30 of the 500 stocks. And you could see here, 22%, 23%, 31%, 53%. And down it goes, lower and lower and lower. But I wanted to show you the best ones. Let's just look at the top 5, okay? 53%, 42%, 37%, 32%, 31%, 31%, so on and so on. And again, this is roughly over 60 days, because this is 30 days and this is 90 days. So the average would be roughly 60 days, give or take. It's not exact, but this will give you a good percentage of what S&P can achieve over a period of a few months, of 8 weeks or so. Not bad, right? I mean, it's pretty good making 40, 50, 30, 20% return in just a few months. So that's the S&P 500. Now, this is the same thing. This is the exact same thing, but for the NASDAQ 100. These are the top 100 NASDAQ stocks. And we've got LRCX, Tesla. I'm sure all of you know what Tesla is. Align, NVIDIA, Applied Material, BIBB, Intel, Apple. Apple, for example, gained 17.47% over the last roughly 60 days or 8 weeks. Again, it's not an exact science, because we're averaging the 30-day gain against the 3-month gain. So you have 30 days, 90 days, 120 divided by 2. Yeah, it's about 60 days, give or take 60 days. So again, NASDAQ, 42%, 40%, 22%. And if you look at a large average, you'll see that there's a good average around 16 to 20%. That's not an outlier. So 42% is a little bit on the high end, and S&P, again, a little bit on the high end at 53. You will see that the strength, there's a lot in the mid 20th percentile, and the NASDAQ has a lot in the high teens. Again, I'm not trying to give you the best stock. I'm just trying to give you something to look for, a common thread. And remember what I said, the average small cap stock, a penny stock, gains on average 8.5 times. Remember this number, 8.5 times more than the average blue chip or tech stocks. So this number should be 8 times. Can you imagine 400%? Can you imagine this being 160%? Crazy numbers. But let me show you something eye-opening. Again, this is the 60-day average, if you will, for the NASDAQ, and this is for the S&P 500. And I run this list daily. But now let me show you something really cool. These are earnings surprises for the last And let me show you the change in price. 99%, 84%, 44%, 22%, 19%, 16%. It actually looks very similar to this, right? To these numbers right here, right? For NASDAQ and for the S&P. And again, I just wanted to show you both. If you take the top 100 NASDAQ stocks out of the S&P 500, you're going to get the NASDAQ 100. So it's not completely a separate list. But again, some traders trade tech stocks, some trade blue chip stocks. So I wanted to show you the average 60-day over the blue chips and over tech. I'm not going to discriminate. Now, again, let's look at this list. 99.22%, 86.25%, 44.59%, 22. So how long did it take for these stocks, JAN, SRNA, PECD, MDCO, how long did it take these stocks to reach these type of returns? What if I told you it took less than 24 hours? No, I'm not kidding. I'm not playing games. I'm not joking. I don't joke around stuff like this. Intraday, not even daily. If I go to daily, you will see this is let me increase the number here. Again, KZIA 130%. I just raised them from top to bottom. So you see an order here. This is the last 24 hours. This is from yesterday to today. 130%, 48%, 37%, 35%, 28%, 21%, 21%, 20%. That's 24 hours. This is just today, not even 24 hours. This is just the last several hours, So, and again, let me just organize it by higher to lowest. 99% in less than 8 hours. 85% in less than 8 hours. 45% in less than 8 hours. That's the kind of gains I'm talking about from penny stocks and small cap stocks. And let me show you something really cool. A lot of traders think that liquidity is really low, so there's a huge spread between the bid and the offer. 9 million shares traded. 37 million shares traded. 30 million shares traded. Some of these small stocks trade bigger than large cap stocks. I mean, 10 million, 2 million, 30 million. These are some numbers. So you've got the liquidity and you've got the potential for explosive. When I say explosive, let me quantify it. 8.5 times larger than S&P or NASDAQ 100. Again, this is 60 days, 53%, 42%, 37%, 32%, 31%, 31%, 30%. This is over, again, 60 days, 42%, 40%, 22%, 21%, 21%, 21%, 19%. This is in less than a full trading session. 99%, 85%, 45%, 22%, 19.22%, 17.20%, and so forth and so on. Folks, less than one trading session. So when I say penny stocks and small caps give you the opportunity to make 8.5 times your money in comparison to large caps, I'm not messing around. It's right here. Hope that helps. Folks, I just revealed how to trade the most overlooked and explosive stocks in the entire U.S. stock market. No, I'm talking about stocks, not options. Stocks that deliver over 135% return, over 123% return, and 90% return. No, not years, not months, not weeks, days. Matter of days. Odds are you're completely ignoring these securities. And it probably has to do with their reputation. They're risky, right? No, I'm going to show you how to trade them correctly, the right way, limiting your risk. Click the link below. Watch this presentation before it's offline. And unlike 99% of these stocks, they're completely uncorrelated to the stock market. That means they don't follow the S&P 500. They don't follow the Dow. No, I'm not talking about bonds. I'm not talking about commodities. These are normal company stocks to trade on U.S. exchanges. There's so much that I need to tell you about these stocks and how to trade them correctly. Click the link right now at the bottom of this page. This training is coming down. Learn to trade small cap explosive stocks the right way. Do it now.